Hello, this is Joe Pryor of the virtual real estate team in Oklahoma City. I want to talk about market conditions here at the 1st of July. Now, I did this video about a week and a half ago or so, but something has happened since that time to make me want to redo this, and that is something called Brexit. Now, Brexit was the vote that they had in Great Britain about whether they should leave the European Union or not. And it's important enough for me to delay because, for one thing, the Federal Reserve decided not to raise interest rates ahead of that vote because they knew there could be a great degree of volatility about it. And lo and behold, that's exactly what happened. Unsuspectedly, Britain voted to leave the European Union, and the markets just went crazy, and there was a tremendous amount of loss in the first few days. And also now is the situation where the Netherlands and Denmark and Greece and other people in the European Union are now considering their own votes. Now, when you have this kind of turmoil going on in the world, then what happens is what we call a flight to quality by institutional investors. These are the big dollars. These are the banks. And so what is happening right now is what typically happens is people are investing in United States treasuries and mortgage-backed securities. So rates have actually dropped. And now, because of this turmoil and uncertainty, it's now expected that the Fed won't even think about raising rates for, say, a year from now. And so this is kind of a change. We thought we'd have 2 rate increases. And so the good news is that with rates down, then if you're a buyer, of course, your affordability factor is higher because your payments are lower. And if you're a seller above $200,000 in Oklahoma City, kind of our demarcation point of affordable housing, then, that's going to maybe say somebody, well, I was thinking about 200, but maybe 225,000. So it's going to start helping the upper price ranges. Now, on the market side, I want to talk about a few things that we've noticed because we have quite a few listings right now, and all these listings that we have are mostly from a corporate investor that pays cash. And so what we're getting is a lot of offers on our properties, and typically these offers have about $6,500 where the closing cost asked for. In other words, what we're seeing all the way across the board is FHA and VA loans, 3.5% or 0 down, asking for closing cost, even though a buyer always pays for closing costs because the seller just raises the price. But we have buyers with no money. They can qualify, but they have to have someone else paying their closing costs. Now, on the other end, we're seeing some problems with houses that normally would sell but don't sell, mainly because they don't have enough equity in their homes. And because of the lack of equity, when they come in with closing costs and repairs and normal closing costs and $6,500 extra, they can't really afford to sell their homes. And so if you have a lot of equity right now or cash, if you don't know anything, you're going to be in the driver's seat in that respect. So we're seeing some holes created. We're seeing some properties that normally would sell that are not selling. Now, to the luxury market, still a problem. Now, oil is recovering nicely. Even though it sold off about $3 a barrel after Brexit, it's now back up, hovering a little bit below $50 a barrel. We don't think it's going to go as high as possibly 60 because of this. It still could before the end of the year, but it is creating a nice recovery in Oklahoma City, although that recovery is not going to be seen until 2017, and especially we need consistent pricing through the end of the year. So the luxury market, which is normally slow anyway, because when you're buying a $750,000 home, not a whole lot of people can afford that, we're seeing those not selling. And so, we're adding a little bit of inventory there, and they're sitting on the market in some cases for 2 years. So we're seeing that happen. But if you're below 200,000, which is where I normally try to focus the market conditions, you're still in really, really good shape. And what I would suggest to you, if you think your house will appraise, let's say you owe $175,000, somebody comes in with $3,500 or $6,500 where the closing costs are more, then the question is, can you actually go over the listed price? And we are seeing this. So say 178 and is appraising. So we're going to watch this trend and see what happens. But I think this is post-2008. These are people with a lot of student loans. They're people that need help on closing costs, and that is affecting the market, even though in Oklahoma City it's pretty much steady as she goes. So 2 major factors: supply and demand, which has been low here in other parts of the United States, drive prices. But also people without money that need help on closing costs are also raising the price in Oklahoma City and elsewhere. This is Joe Pryor of the virtual realestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.